The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed. For a full list of current recommendations and stocks owned by staff, members of Intelligent Investor can visit www.intelligentinvestor.com.au.
Welcome to StockTake. My name is Gaurav Sodhi. Joining me today is analyst James Carla. Welcome, James.
Good morning.
And from his prison in Melbourne is analyst Mickey Mordek. Hey, Mickey, how you going?
I'm going fine, thanks, Gaurav. Thanks.
Yeah, everything. You staying sane, and you got your
great.
puppy and your place. So everything's all right.
Yeah. It's having the time of my life here. It's it's pretty great. Yeah. How about you? How are you guys going?
I feel as though we've lost you to sarcasm. That's not a good sign.
Not a good sign this early in the proceedings.
I know you've got a long way to go yet. We've still got to go through all the other stages of depression. What you've probably tumbled through wit and despair. Now you're at sarcasm. Goodness knows what comes next.
Oh, geez, I'm glad I at least got through wit. I didn't even realize I got there.
Well,
I didn't notice.
I'd say that'd be a very thin layer for you. Despair would have been a long one.
Yeah. Yeah, no, it's going okay. I mean, it's hopefully it's going to be over soon. I think everyone's just looking forward to hopefully getting back outside and going for a walk legally. That'd be nice. So, yeah.
Right. Well, one of the few upsides of all this, Mickey, is that you've had plenty of time to work on stocks, and that's a good thing because reporting season has thrown up a lot of work. A lot of companies have already reported. We're really in the thick of it now. So I thought today we'd just bring along a couple of stocks that we cover that we've looked at and that might be interesting or have reported some news that's worthy of comment. Who would like to go first? I think, you know what? I might go first this time. I might kick off proceedings with BHP because I just finished the work on it yesterday and it's pretty fresh in my head. I trust that's okay with you, gents.
Says me.
Okay, gives me a bit of thinking time as well.
I think you raised an important point, actually. Well, an interesting point because, they come so thick and fast. You look at them. A few days later, it's hard to remember which one was doing what. But there we go. It is tricky. It's all good fun.
I find some of them you do need to sit down and look at and hear or read the entire presentation. The ones with lots of moving parts and lots of complexity, they genuinely take a long time to get through. And others you can whip through very
Well, that's right. I mean, there's complicated businesses and results and less complicated ones.
Yeah.
But the trouble is that sometimes the sort of the calls and the presentations can stack up a bit because you have to listen to them in time, and you end up. I've listened to 3 calls at the moment, and I've still got to sort of go and finish off the work and write the articles, and it's hard to remember who was saying what.
Got a tough life here, don't we, guys? In our pajamas at home.
You got to think as well. That's probably
the
hardest
part. It's always the hardest part.
It's because you get all this information and you've got to update things and update your model for the company or whatever, and that's probably the easiest stuff. But it's actually thinking about has anything changed or and finding the time to actually. To think about it is probably the hardest.
Yeah, and the danger is with so many numbers, it's actually quite easy to focus on that and actually miss the important stuff.
Yeah, I completely agree with that. That is tricky. I also throw in there that because this is a time where lots of other people's opinions get thrown around as well, it can be difficult not to get influenced by the share price because that moves around a lot at this time, and then B, lots of other people who are talking about the same stock.
Yeah.
I found that I often for example, yesterday, Mineral Resources reported, and I looked at the result first and thought, oh, wow, what a cracking result. This is great. And looked at the share price, it was down 10%. And I've read a few broker reports this morning. I don't think they quite, still think this company is misunderstood, but regardless, we won't go into MinRes today. Let's move on to BHP. So the numbers here I actually don't think are all that important, and they're not surprising. And that's often the case with miners. Miners tend to report their production numbers well ahead of the financial results, and most people would have an idea of what commodity prices have done in that period. So it's actually very easy to come up with an idea of what earnings are going to be well ahead of the announcement. And so you often find with miners, unless there's a big change or a big surprise, the numbers themselves are really unnoteworthy. And that was the case here. Obviously, iron ore was the star, and obviously petroleum and coal were the big laggards in the portfolio. Copper pretty much stayed the same. And that's sort of what you'd expect of the last year or two from BHP. The big surprise really was the strategic direction of the business, which is now shifting again. So they talked about divesting a couple of coal mines, and they've mentioned thermal coal divestments in the past. This was the first time they formally flagged metallurgical coal divestments. And what they're doing is they're trying to concentrate the coal portfolio into the highest quality metallurgical coal, and that means selling off anything that isn't absolutely top notch. It's known as hard coking coal, and it's the top premium coking coal product. It's an abundance in the Bowen Basin in Queensland, and BHP has more of it than anyone else in the world by some margin. So this actually works towards shoring up the quality of the coal portfolio, and I think that will go towards protecting it against some of the problems facing coal in the future. The other thing that was a bit of a surprise to me was that they also talked about acquisitions. They singled out petroleum, copper, and nickel as acquisition targets. The first time in about 5 years I've heard BHP management talk about acquisitions, which is I'm not necessarily concerned about that, because I think the board and the management are very keen to maintain the very good track record they've got of capital allocation and returns on capital over the last 5 years or so. And so I think we're going to be looking at small acquisitions rather than big purchases of big existing miners. And finally, the other point to mention is that they did talk about divesting Northwest Shelf, which is, as people may be aware, the big LNG project offshore WA that Woodside operates. And I thought that was really interesting. And on the call, they talked about how Northwest Shelf is turning into a tolling operation, and they're not really interested in holding infrastructure tolling assets. They want to be exposed to commodity prices. I think that's
So
true.
how much do they own?
They own a 16% stake in that, and it's probably worth 3 or 4 billion US dollars.
And
Chevron,
Woodside's got how much?
there's about five parties, each have about 16%.
All right, okay.
So it's equally owned, but Woodside operates it. Woodside
Operates,
also owns 16%.
yeah.
Woodside at the moment is talking to Chevron about buying their 16% stake, and it'd be interesting if they look at BHP and also buy their stake as well. I think it speaks quite well of Woodside's um, investment case, that these other miners are trying to get out of tolling or infrastructure businesses exactly at the same time where Woodside is trying to increase their exposure to that part of the market. BHP is famous for selling assets at the top of the cycle. At the bottom of the cycle and buying at the top. And I also wonder the fact that they're selling coal mines left, right, and center, what that says about where we are in the coal cycle.
But it's a different type of game, though, isn't it? Woodside, the Northwest.
Yeah, you're right. I think I was thinking that as well. I think it is a legitimate divestment. If you're a miner and your promise to shareholders is that we'll be exposed to commodity prices, and you're sitting with a substantial stake in a piece of infrastructure or tolling operation, I think it makes sense to sell that off. So
Yeah,
yeah, I get
so
that.
I guess it's just the timing of that. But yeah, it's a question of whether there's an efficient market, whether BHP can read it better than other people, I suppose.
The amount of cash flow coming out of this thing is amazing. The returns on capital are exceptional. The margins are great. I still think investors do not appreciate that this is no longer just a good mining business. I think this is a good business. And we do deal with cyclicality in this area, but there's other good businesses that are also cyclical, and I think this now falls into that bucket. Um, I'm quite happy to hold it for now, but I've seen a few people getting quite bullish about BHP. This is not the time to get bullish about it. Iron ore prices look scarily high to me. I think they will, in the next 12 months, we'll start to see more supply come online and more reasonable prices being offered. In my view, if we can get to around $30 on BHP, I can think it's then starts to make sense to start taking nibbles. And a little bit higher from here, I think it makes sense to start selling. Sort of up to about $45, it probably makes sense to start selling a little bit. So we're in a comfy hold position, but I will update um, what we're doing in the portfolios and the recommendations as the price dictates. Any questions on BHP, gentlemen? I know your eyes are probably glazing over a mining stock, which none of you have ever owned, have no interest in owning.
Oh no, it's not
You
that.
said it.
Yeah.
I genuinely think you're missing out. I think value investors in particular have been guilty of not doing the work on mining stocks. I've lost count of the number of good
But it's
value
hard to have an
managers.
edge, though. That's the thing. Now, look, I think that you've done a great job with resources over the years and looking at the cycles and all that. So, hats off. But it's very hard to look. You got to really focus on that. You can't just sort of have a quick look at BHP and think, "All right, I've got it." I mean, look, there's one thing sort of buying and holding these stocks, taking a long term view and all that sort of thing. Lowest cost producers, I think, that have their attractions, because they come through most conditions best, probably undervalued very long term. But really to try to sort of judge the comings and goings is, I think, very hard unless you're really, really paying attention.
Yeah, I think the trick is really to focus on them as cyclical businesses, and you got to watch where we are in the cycle. It's amazing how
But how
much.
can you do that if you're not? Do you know what I mean? You can't just sort of judge the cycle, you know, from a well, maybe the best place to do it is from a distance, but
Mm.
but
Yes, I
there's a
think that's
lot
exactly
of
right.
people
Actually,
trying to do that.
I think
yeah,
as well, like if there was a low cost mine and all it did was mine and it just distributed 100% of the profit, and that's all it did, then I'd potentially be interested in something like that. It's more when they get the cash back and then they go, well, what do we do with it? And then you know how are they allocating that money into new ideas? And like it's a finite resource, so eventually earnings dry up and you've got to keep finding new ways to grow earnings. So I just there's other businesses where you've got kind of tailwinds that help grow earnings a lot over time, and with these businesses earnings are kind of always facing that uphill battle where you're just depleting a natural resource, I guess. So um
yeah.
that I mean that's just like a broad overview, but I wouldn't ever discount the sector entirely. Like I think for example, like Aluka and that Mac royalty sounds like an interesting play, but um, yeah. So that's kind of how I would look at it.
Mm. I think price is really important when you're investing in this sector. There are some sectors where you can afford to pay a little bit more, or you can afford to be a bit greedy. And you can be a bit blasé about prices in different sectors. That's not the case here. I think you really have to be price focused a lot to do well in this sector. And that's why, for the most time, I've said this in a few reviews that for 80% of the time, we can probably safely do nothing with our resources holdings. If you don't own them, you don't need to own them. If you own them, you can hold them. It's that 20% of the time that dictate action. That's where your profits are really made, and that's when you got to jump into action. And we're not in that 20% time yet. It'll come, but we're not there yet. So for now, BHP is a hold. Very quickly on Woodside, they are gearing up for acquisitions. There is no doubt in my mind that acquisitions are coming. If you're holding that, there's likely to be a capital raise at some point. So just keep that in mind with your portfolio weightings. They're going to buy, in my view, they're likely to buy Chevron's stake in Northwest Shelf. They've preempted um, a bid on another oil asset in Senegal, which is actually quite a good one. So there's a little bit of activity going on. They're one of the few oil businesses in the world that has the balance sheet to buy when the market is down. So it's good to see that they're doing that.
Well,
But do
except
expect a
you
cap
said
raise
they were
coming.
going to have to raise capital. So,
Yeah.
I mean, sometimes an acquisition is a bit of an excuse to raise capital and get an asset that's making some cash because you were a bit constrained beforehand. That would
Yeah,
happen.
no, that I think that's really true. Yeah, but these acquisitions make a lot of sense given Woodside's strategy. They've been waiting for to try and lift their equity stake in the Northwest Shelf. I think it makes a lot of sense to do so, and it makes sense to do so now when LNG prices and oil prices are quite low. And the other acquisition in Senegal, they're buying that at sort of less than half the price that they themselves bought into the asset a few years ago. So again, it does make sense. They can probably sell that on at a later stage. And there are other strategic reasons. There's a Russian company bidding on that asset. They want to keep the Russians out. Otherwise, they face potential US sanctions. So there are other reasons why it makes sense for them to hold it. But I take your point, James. It's a really important idea.
I mean, if they did nothing, would they need to raise capital?
No.
No. So that's probably discounts that theory then. So.
Yeah. But it's a good look at. I think that's really important. We should be we're very suspicious when companies use bad news as an excuse to, or sorry, acquisitions as an excuse to raise capital. But anyway, that's enough for me. Mickey, what do you have for us?
Well, so I better touch on Australian Ethical, given that it's had a pretty steep decline since we first upgraded it. So that was about a month ago, and I think it's fallen by about a third since then. We did put out an alert about the IWF sale. So stock's gone from maybe 80 times earnings to about 50 times. So I guess that's the risk that we took when we first upgraded it. The driver, I guess, of that was the announcement from IWF that it would be divesting of most of its Australian Ethical stake.
How much is that stake? Was it 20%? No.
No, it wasn't quite 20%. I think it was somewhere between 16 and 17%. And so they're retaining about 4.9%.
Oh, they're retaining. And what was their reason for doing that? Did they give a reason?
Yeah, they did. So they said, first of all, well, obviously, IWF's balance sheet, it's got a little bit of debt, so they're looking to reduce the debt there. So that was kind of their stated reason.
Sorry, Mickey, was it IWF or was it one of their fund managers who owned it as an investment stake?
Yeah, it was one. Sorry, it was one of the subsidiaries, but it's a IWF owned subsidiary. I forget the name off the top of my head.
No, but it was owned by IWF rather than by one of their funds.
No, it wasn't owned by one of the IWF funds. It's owned by IWF.
Okay,
yeah.
I see. Okay,
yeah,
right.
Yeah.
So it can actually, those funds can be used to retire debt, I guess is the point.
Yeah, that's right. And
Okay.
and so that's the idea here is that IWF's looking to reduce debt. I think they also need to look at the conflicts of interest across that business as well, and potentially having quite a large stake in a fund manager could be perceived as a conflict of interest.
Can I be a bit cheeky and suggest that it'll also be a conflict of interest for a lousy business like IWF to own an ethical fund manager?
Well, this is the other interesting part about it is after the whole Royal Commission, kerfuffle with Kelleher. So AF, Australian Ethical actually divested very publicly of all IWF stakes in all its funds, even while it was a substantial shareholder.
I see.
So I wonder if that's just
payback.
There has been a chief change in the interim, so we can't assume that it's payback. But I mean, I'm sure it didn't help.
Well, I think a lot of water's gone under the bridge since then. I mean, we got new management, and the old management was kind of vindicated to a degree, anyway.
Yeah. Well, I mean, So I mean, but it's just I guess this was probably on the cards for a while, and then you've got the run up in price, and they're probably going, well, hey, let's just help pay off our debt a little bit. I think so.
Well, that shouldn't reflect on Australian Ethical, should it? Because if these are just IWF reasons rather than anything to do with Australian Ethical. But I mean, of course, there's the shock to the market. I mean, is it a fairly thinly traded stock?
Well, so there's not a lot of stock available. There's not a lot of liquidity, and I think the issue was that they did the sale. You've got to sell it if you're selling a big stake. In an illiquid stock like this, you've got to sell it at a big discount, and so they sold it. The price is at $6.30. I think the book build started at $5.25. So basically, if you're an institution and you've got this stock, you can instantly sell it at $6.30, make a profit. And I think you've got these institutions that have bought up that parcel, and maybe they weren't looking to be long term holders.
So what's the price? So is the price now level with where IWF sold it, or has it gone further?
No, it's below there now. So so I can't say obviously we don't know 100% what's caused the decline. It could be that. It could be just that the market's no longer willing to pay as high a multiple. So yeah,
Seems
but
pretty happy to pay high multiples for everything else.
well, I think the problem
we can
is
discount that,
but
not for this business. Yeah, it's
Yeah,
given everyone a bit of a fright, I suppose, and so it's made people think there's always the fear that you don't know something that IWF might know and that sort of thing. So I guess that plays into it in the short term. But I mean, as you said in your initial upgrade, I mean, this is very much a long term investment, and when you pay that sort of price, you are at the mercy of the market to some degree, at least in the short term.
yeah. Well, I think that's the thing, and so I mean, obviously it's a market leader and it's growing pretty fast into the space as we outlined in that article. So, there's lots of space for this to grow, and there's a strong balance sheet. It's profitable, so it's hard to conceive of this going to zero, for example. That would be extremely hard to imagine.
I'm pleased to
Um,
hear it.
so which means it's just a case of kind of hopefully averaging down. And I guess and we did mention this I guess in the first article, but the recommendations guide can be a little bit blunt. But if you haven't potentially taken your full stake, then this is actually just a better opportunity, hopefully to be getting a better average price on the stock.
Famous last words, but you'd say that there doesn't appear to be anything fundamentally wrong with the business.
Yeah, I don't believe so, and I think obviously keep in mind the recommended weightings. Don't keep in mind the recommended weightings.
Mickey, does AEF lose any distribution muscle from losing IWF as a shareholder?
Not that I can see. I don't know. I'm not privy to the relationship there.
Just
But
post the Royal Commission. You're not allowed to do too much of favouring.
yeah, I wouldn't have thought
I
so.
think it's all
Yeah.
pretty clean these days.
And I think also just like, the Australian Ethicals funds stand up on their own right. They perform pretty well. They're really highly regarded. They've won lots of awards. So if you're an advisor, I don't think they rely on special relationships. I think that the funds kind of sell themselves. So, and plus they're getting a lot of flows just direct, just people just going, looking at the website, switching their super themselves. So that they're not super reliant on the advisor channel.
Now, speaking
Anyway,
of Super Mickey, now you and I both own AEF, and we both like the super part of this business. Can you just explain that quickly about how that relates to the investment case? What makes it so attractive?
Yeah, so I guess this is what kind of separates it a little bit from just your average fund manager, is that steady contribution aspect to the superannuation. So if you take and also, so Australian Ethical's average member is quite young. So if you take it, say a 35-year-old with a 50K balance and they're putting in $7,000 or $8,000 a year, well then their natural kind of growth rate is 15% per year. So they're growing their balance at that sort of rate, which is huge. And then obviously you've got fund growth from just natural market appreciation, and the customers are super sticky. I mean, most people don't change their superannuation that often. Most people don't even know where their superannuation is. So I guess when you make the effort to actually change it, you tend to stick around unless something really, odd happens or unusual happens. So, so you've got this nice tailwind, and then, so they're growing members by increasing market share and winning
Yeah.
across accounts from other super funds.
Having a large cohort of young super members is really valuable, and it doesn't necessarily pop up in today's financials. But what you have, as Mickey says, is you got young people with low churn rates sticking to you for a long time, and their earnings are growing over time. So a 35-year-old will earn more as they turn into a 45 and 50-year-old, and all those so there's so much growth just automatically baked into AEF's fund. You got the super guarantee, then you got higher earnings, and you got low churn. It ends up being a really attractive business if you can get younger people, and that's something that AEF has managed to attract quite successfully. I think that's part of the reason why a high PE actually makes sense for a business like this. It's because you get a lot of future growth just baked in without having to do anything, and it's not really turning up in numbers today. So
Yeah, for sure.
that 80 PR, I don't think that's crazy.
Yeah, well, hopefully not. We definitely hope not. But I mean, it is a lofty multiple, so this is the risk, and yeah. So
Well, I think
hopefully,
I
yeah.
sold my shares in Magellan when they were on a PER of about 80, and that was when they were a few dollars, and they've gone up more than 10 times since. So
We
you
should
know,
add that
I
JC
think.
bought this when it was below net cash, right? I find that
Oh
amazing.
yeah,
Magellan.
yeah.
Yeah.
I think I paid 37 cents for my cheapest Magellan shares.
Wow.
But
Geez,
yeah,
that would have been a
I
20
I
bagger.
held barely any beyond $6, and then sold them all at
Oh,
$9.
you
But
dummy! You only made a
yeah,
20
no,
bagger.
but look, I sold half after they doubled
Mm,
because I took a big weighting. This is in the GFC, and they were below net cash, and that's why I bought them. So as they
mm.
doubled, geez, I was taking some money out. But so look, that's all. But the point of the matter is that the PE in a rapidly growing fund manager really doesn't tell you a great deal.
Yeah.
You're off a low base, and you can go a long way, and you can go a long way without having to reinvest capital.
Mm.
And so look, in the short term, you're at the whim of the market. But it's. I think that the important thing to look at here is whether they're continuing to do what we're hoping for them to do, and be patient.
Did you have another one as well, Mickey?
Well, I guess yeah. So the other result that we wrote up recently was Class, which did well following the result. So yeah, so it looks like now they've managed to kind of pivot that business through a couple of acquisitions in the document and compliance space, which gives them a strong foothold in that space. So just to go back, sorry, Class is the software company providing super self-managed super fund administration software, um, and for a long time people have assumed that there's not much growth runway, which is a correct assumption, and other attempts to basically grow the business have not really succeeded. So they've launched a new Class Trust product. Well, they're launching that in October. It looks like that's performing ahead of expectations, so management's flagged that it'll be released earlier, which will hopefully help grow revenues into next year and the year after. And then they've made a few acquisitions, as I said, in that document and compliance space, which look to be quite sensible and potentially open the door to um, more earnings per share growth over the coming years. So yeah, I think it's just gone from people assuming obviously no growth and obviously the pandemic panic as well. So you got it at a very cheap price, and then now I think it's just more at an average kind of price, and we can just hold it and wait to see how that unfolds. So
How are you thinking about this, Mickey? Is this a business you would hold if it's fairly priced, and is this one you intend to hold for a long time?
yeah, well, I think we go into every investment hoping to hold it for a long time. I wouldn't say this is of the uber quality software business. I'd say like a Zero or even maybe an Altium or something like that. But I think they've got a very dominant share in that super space, and extremely high retention rates, over 99%, which
Because
shows you
there's a very good competitor there. It's called
BGL.
BGL. Yeah.
Yeah, absolutely. Yeah, but I mean, I think it's just going to be a two-player market
Mm,
basically. And a couple of the acquisitions Class has made, I think, position it pretty well as well.
hmm
In that market. So yeah, I think it's got a good position. Sorry, probably maybe not a dominant position, but a strong position in that market. And then there's potential for growth, elsewhere. So I think there's always time for this business to evolve, and I don't think it's going to be the same business in 3 to 5 years. So I think we want to give it some time to run and see if management can deliver.
I've got to chime in on this idea that you enter an investment hoping you'll hold it for the long term. I think you've got to value it like that, assuming that you will or that you might. But I'd far rather it doubled and I sold after a year and a day. But anyway,
Yeah. Yeah. Well, I mean, it does. It makes you question.
you've got to think of it like that. You've got
Yeah.
to value it like that. I grant you.
Yeah.
You've got to be prepared for that as well.
Yeah. I mean, well, it's still a pretty small business. And there's it looks like there's a bit of earnings growth coming. It's not ridiculously priced. It's on 30 times earnings. I mean, it's not ultra cheap anymore, but it's not crazy if it can
30's
deliver on.
fine. 30's the new
Yeah.
20.
It is the new 20.
Mm.
For a software stock, it's
Is 80 the new 30?
80's the new 30. And 20 is downright cheap. 20 is the new 10. If you find something on 20 times earnings, it's a bargain.
there's something wrong with it.
Yeah, there's not
Something's
much.
wrong with that.
There's not much.
Yeah.
JC?
Well, so I've got Altium to talk about,
Mhm.
which produced an interesting result because look, I mean, it had pre-announced it, so really it was all around the edges were the interest. It had already told us it was going to miss its revenue target of 200 million US. And it came in, it had told us that it was going to make 189, which is what it did. But it said some very good things about how well its Altium 365 product is progressing, which was
And that's the cloud product, right?
yeah. So this is the cloud platform that was originally released for free last, I think, November or December, and then the full version of the product was only released in May. So it's very early days, but this is absolutely crucial to the company's strategy of creating a platform. So their product is software that helps you design printed circuit boards. But they, at the moment, a printed circuit board gets designed. You have someone designing the printed circuit board. You have someone designing the mechanical object, say a Fitbit. The example they always give is a Fitbit, which has to. So the printed circuit board is quite small, and it has to fit a very particular sort of compartment within the mechanical shape of the object. And so the mechanical design is done separately. The parts are ordered separately, and you may find that a part's different and you can't use that part because it doesn't fit with the mechanical. And then when the manufacturing comes, maybe so it's all done in stages. And their idea is to get everyone onto a platform so that the mechanical people can talk to the software.
That makes sense, right? That makes a lot of
Yeah, it
sense.
makes perfect sense, and that's the whole investment case, really, because they are getting to such a dominant position in the industry. And they're ideally placed to create this platform. And management has been very successful in the past at building the business, and so I think they're in a very good position to do that. And as long as they're continuing to take wickets, as Aaron Makazimi says, he likes the cricket analogy. As long as they're continuing to take wickets by progressing that strategy, the runs, the revenue they're making is not so important.
Now, JC, we need an honest answer here. It's a very important question. Are you investing in Altium purely because you found another cricket nut in its CEO?
No, I'm not. But I do like it. I like particularly that
Cricket.
I like cricket, and I like that he's prepared to go off on a bit of a tangent to try to explain things. A lot of management's a bit guarded. It's good when when people are prepared to just sort of, I suppose, shoot from the hip a bit, but just because it makes them sound as if they're not hiding things. Other managers sometimes sound as if they're a bit more evasive, but so he's just trying to explain the way they're thinking about things, and I love the fact that they're prepared to set aggressive targets for the future, for what I would call the medium term, but what a lot of people call the long term. The next 5 years, of course, they've got targets to reach 500 of revenue and 100,000 subscribers.
And they've hit those in the past. They're medium
Well,
term
they've hit them in the
targets.
past, but now they're missing them, and that's but you see, that's the other point. I love that they're prepared to set aggressive targets, but I love even more the fact that they're prepared to sort of tear them up and not worry too much about it, because the last thing you want is management, when they're hit by events that they couldn't have expected. you don't want them managing the business towards certain
Yep.
targets. I mean, they possibly could have made their revenue target this year if they hadn't been discounting to meet the subscriber target. And their eye is on the very long term. They set goals along the way, but look, if the long term winning the test match is the important thing, and they're prepared to, sometimes, as Aram Merkazimi said, pitch it up a little bit and risk going for some runs in order to take the wickets.
I guess as well, having like someone like is it Arum Merkazimi?
Yeah, Merkazimi. Yeah.
He's got that pedigree, I guess, and he's come from nowhere as well, and he's got plenty of on the line himself personally, and so I guess when they're giving you these long dated targets, you kind of you're probably more willing to go with it, and probably not second guess it as maybe like hyping it or something like that.
Yeah, that's right. He landed in this country. Look, it's worth looking up.
It's an impressive story. Yeah.
Yeah, it's worth listening, trying to find a sort of biography of him online, because he landed in the country not being able to speak the language, and as a refugee, and went to uni and couldn't understand the lecturers.
Maybe that helped him.
And well, maybe, yeah, but he look, he's come from there as an engineer, and look, he's got a very impressive track record. Look, if anyone's going to be able to do this, I think. Look, I don't like backing management too much, paying too much for management. But I think what one's paying for here is the idea. But it's big things that they're trying to do. So you want people that give you confidence.
Now, finally, JC, on Altium, one of the things you pointed out to me was just how forcefully they're crushing their competitors. They've come from a small sort of a third tier competitor in this industry to now dominating it, and now potentially setting up a platform to entrench that dominance. Where are other competitors here? Why are they particularly weak, or is there something about Altium that makes them look that way?
Well, they focus on other areas, I think, is the
I see.
is the
Okay.
real answer. So their main this is a sort of a sideshow for some of them. They're more focused on actually designing chips
Okay.
as opposed to PCBs.
Hmm.
And they're also focused on larger customers, whereas I think where Altium's still on a bit of a march on them is that it's traditionally been big in the sort of smaller user maker sort of market.
Hmm.
So where engineers sort of start out as students and whatnot. And so you've got this huge body of people that are familiar with its product. So as it's been able to improve the product and catch up with these bigger players,
Hmm.
it's had a natural body of people who are familiar with the product and like it. And it's sort of, and that's really given it the opportunity to sort of catch up with the bigger players, I think.
I see. Yeah. Okay. You got one more for us as well?
Oh, I was just going to talk about Seek quickly, which is, so the interesting thing about Seek, I suppose, what struck me about the result and the market reaction to it anyway, was that, when is guidance not guidance sort of thing? Because that Seek are quite reasonably saying they're not providing any guidance. But because they want to try to help people out a little bit, what they've done is and this is what they've been doing since April or whenever, they've been providing what they call scenarios. So they provided a scenario for the 2020 year, and now they provided one for the 2021 year, saying, look, if volumes do this, and a few other things happen, then this is what we expect our EBITDA may end up as. But look, it's just a scenario, you see. So in their result, they painted a scenario for 2021, which was pretty negative, more negative than a lot of brokers were expecting. It's talking about volumes, particularly in ANZ and Asia, continuing to be quite low for the 2021 year, recovering a bit, but staying below 2020 peaks. And so the market sort of interpreted that as being them saying that this is what's going to happen. And it's interesting that the market doesn't feel that it wants to make its own assessment of what's likely to happen. And so Seek's, it's just a curious sort of situation. And, I suppose it shows you provide any kind of outlook at all, the market's going to hang its hat on it. And I guess that's what's happened. But they probably wanted that because, look, they've set the bar fairly low, I think. There's nothing in it for them to set an aggressive scenario, although I suppose that's sort of what Altium's doing. But anyway, never mind that. And Altium, by the way, did push out its 500 million revenue scenario by
Didn't Seek
a
have?
year or
Didn't
so.
they set an ambitious long-term?
Yeah, they did.
target?
They've scrapped that. Well, actually, this
Okay.
I took a little bit of an issue with this actually because they said they were taking the timeline off that. So they got the 5 billion revenue target
Yeah.
for which they had been aiming for 2025. Their aspirational revenue target. So good. Again, that's great of management to set targets. And they were but they were only sort of half willing to tear it up. Altium said there's a sort of talked about a 6 to 12 months delay on their revenue target. Seek just took the timeline off it completely, which to me they may as well just remove the if you don't put a timeline on a revenue target, I mean things grow. You certainly hope Seek's going to grow over the years, given the price you're paying for it. So to take
Kind of can't be wrong, I
Yeah.
guess, if you don't put a timeline on it.
Well, that's right, but the difference between 5 years and 10 years is massive. For revenues to triple. So yeah, so I thought that was a little bit evasive. I think I'd rather have seen them just literally They don't have to scrap it, but they can say, "Look, we're just shelving that for the time being," and that and then just move on. But which is sort of perhaps what they did do, but they just weren't very explicit about it. Which is, I'm not used to criticizing Seek's management. I think they're excellent. So they're just, just grated slightly compared to what I'm used to. But probably just a minor sort of, I'm probably taking it too seriously, really.
Now, final question for Seek, JC. How are you concerned about the cyclicality here? I mean, clearly, job ads in Australia have fallen. Australians the largest contributor to profit. An ongoing recession in Australia, does that worry you much?
No. I mean, I'm like you, Gaurav. I love a cycle. No, it's different though, from resources companies because it can. I mean, with a high growth quality business like Seek, the cycle really just plays a benefit because it just plays into all the people who look at the short term, and I think if you can stay focused on the long term, it's the weak cycle that moments of weak cyclicality that give you the opportunity to buy it. I'm not saying we're getting that now. We're still above $19, and we just we nudged down the buy price to 16. So, but look, I think that the trajectory of this business long term is very much upwards, and the cyclicality is a sort of wobble along the way on that, and gives you opportunities potentially. So no, I mean, look, I'm trying to look five or more years ahead, really, and the market's maybe looking at 2, and that's why there's the opportunity. So
Nice.
it's all good.
Now, before we finish off, what are we quickly working on for the rest of the weeks? If people can expect, what can people expect?
Jeez, dear.
Just working
Shall I
on
go first?
deciding
I've got
what to have for
mine.
lunch at the moment. So
Yeah, look,
about as far as I'm getting.
I've got those. Yeah, lunch.
So I've got A2 milk, which I've had a look at the result. It was pretty good, but there is a little bit of competition coming through from China and Chinese brands, and it looks like they're proliferating inside China. So how that affects milk powder, infant formula is going to be really interesting. Infant formula is a huge part of their profit, even though it's only I think like it's a quarter of their sales or something. So it's a really important segment, and what happens there is going to determine largely what happens to profit. So that's something to watch. South 32 just reported today. I'm gonna be looking at that and have something up for South 32 as well.
Yeah. So I've just got email reported. Well, actually, for some reason all the companies reported yesterday. So I had
Yeah,
email
everything
Equity Trustees,
reported.
Opticom. So yeah, they kind of all just jumped on the one day.
Yeah.
So yeah, going through that result, it was obviously a pretty mixed bag, a really messy result. So we'll have an update for members shortly, as well as with Equity Trustees, and we'll have a little alert out on Opticom. So, but obviously with Opticom, it's all about the takeover, really. So, yeah, that's kind of keeping me busy for today.
Nice one. JC?
Yeah. Well, I was already getting a bit behind, and then everything's landed yesterday and today, and so I suppose my initial thoughts are on car sales, which I hope to get up today. And then Webjet, which is down a bit, although I'm slightly surprised by that. I mean, they pushed out their banking covenants by a quarter, which is good news. I mean, it says something about the situation we're in. That's the key piece of news. And Ordinates, I haven't really had a chance to look at that yet, but look, the market doesn't seem to be very pleased with it. But look, the result was pre-announced, so
Yeah.
you know,
Can't be in too
I
many
think
surprises, eh?
you know, my feeling is that the understanding from something I've read is that the market's fixating on what they've said about sort of revenue over the last couple of
Well,
months.
I feel like that's just a theme at the moment with all
Yeah.
these results. Is just people are getting so hung up on this year's number. It's
Yeah.
like you're forgetting about, you know,
Yeah.
the longer term.
Yeah, with Ordinate, the amount of revenue they're making this year, I mean, or this month or next month, is so has so little to do with anything. So yeah, look, anyway, but I say all that and I haven't even looked at the results. So we'll take a look at that, and hopefully, yeah, that's likely to be early next week, I think. Well, we'll see. But look, it was pre-announced, so there's not much. Not much in it, and then gosh, there's a whole heap
There's
of
a
other
whole
things.
heap. Yeah, I know.
ASX, I think, just
We're only on
announced today,
Thursday. There'll
and
be more tomorrow.
West Farmers, and
Yeah.
yeah, so there's a backlog developing.
All right, let's roll up our pajama sleeves and get cracking.
Cheers.
Maggie, thanks for joining us from Melbourne.
Thanks, Gaurav.
JC, thanks for your time.
Cheers.
And for everyone else, thank you for listening.